Thank you for joining us for another investment manager presentation in our Quoted Data Around the World series. I'm joined by Hisashi Arakawa, Deputy Head of Japan Equities at Aberdeen and part of the management team of Aberdeen Japan Investment Trust. Hisashi will be providing an overview of the company and we'll talk through the investment team's approach to managing the company's portfolio. I'll now hand over to Hisashi to talk through the presentation.
It's the economy in the world, so it's obviously a sizable market. And at the same time, it's a deep market in that you find some of these global majors such as Toyota Motor to some of these small factories in the outskirts of Tokyo. And both are interesting, long-standing businesses, and many of them are number one globally, oftentimes in their niche fields of operation. And these businesses have built strong moats over time by improving the quality of products and services they provide, and also constantly lowering cost through refinement. And we believe that this leads to the made in Japan quality. Yet, it's a poor understood market in our view, especially if you go down to the mid to small caps. As you can see on this chart on the right, this shows stock coverage, analyst coverage for the benchmark topics. And you can see that just under half of companies on topics is not covered by any sell-side analysts at all. So it's no surprise that around 10% of stocks in Japanese market rose 5 times or more in the last decade. It's this powerful combination of well-run businesses and lack of coverage that makes Japan an attractive market, because we have the local team that can discover these opportunities through due diligence locally. Through our bottom-up stock picks, there are certain underlying trends, multi-year trends that we have discovered. And these include robotics that Japan is good at. There's rising labor shortage around the world. Digital economy is another one. Japan remains very much a paper-based society in many ways, and there's still room to digitize through software being provided by some of these local software makers. Healthcare technology is another one. It's not just about drug discovery, but also some of these medical equipment. For example, Asahi Intex, it's one of our holdings. They produce these medical guide wires that enable non-invasive surgeries around the world. And also these premium products that are recognized as made in Japan quality by the rising middle class in Asia. Some of these cosmetics and other products that are gaining traction elsewhere in Asia. Going green is another one that continues to be a strong trend. Next slide, please. We are seeing global economy, global governments around the world adapting these policies to address environmental challenges, and this trend of energy efficiency, energy saving, it will become a multi-year trend in our view, especially in times like this when oil price and electricity prices are going up. And Japanese companies have the technology to provide energy savings or energy efficient products. For example, Sanken Electric, which we hold in the trust, they produce these energy saving chips that help to cut carbon dioxide emissions for air cons by 30%. Murata it's a component maker. They make these key components used in electric vehicles. The technology for energy saving, because it's used for critical applications such as cars, obviously the track record and safety is important, and it's not something that can be developed overnight. So these companies have that technology to serve the rising demand for environmental sustainability and energy efficiency going forward. Investing in Japan is not just about investing in the Japanese economy. In fact, it's investing in these high quality, well-run businesses, many of which are global companies. So these companies were successful in Japan, and then they translated the borders to become, they'll have global operations. And you can see here, Sony, powder maker Makita, specialized chemical maker Shinetsu, they all have 70% or more exposure overseas. So in addition to local insights, it's important that we understand what's happening outside Japan, because these successful Japanese businesses have become globalized businesses. And we have around more than 140 investment professionals around the world to help us understand what's happening on the ground real time. So just to give an example, you see this chart on the right-hand side, some of these businesses in the tech supply chain. So at the bottom, you see Fujibo, which is a semiconductor polishing material maker, and which supplies to chemical maker Shinetsu, which in turn supplies to Taiwan-based semiconductor manufacturing maker company TSMC, which in turn supplies to Apple in the US. And all these names are covered by us or our colleagues elsewhere in the world. And this enables us to have a real-time feel for what's happening in the supply chain. This has become increasingly important in times like this. So it's not just about identifying opportunities, but it's about identifying risks before the market does. Our investment philosophy is very much about investing in quality businesses that are well-run businesses, run by management teams with track record. And you find that many of the businesses we hold have high margins, high returns, strong balance sheets, and they are leading companies in their fields, and they continue to use the cash flow generated to sustain the competitive advantage by investing in people, in R&D, in CapEx, and management teams have the ability to navigate difficult times like we're seeing now. And they are also aware of the interest of minority shareholders and making efforts on a daily basis to improve shareholder value. And we believe that this leads to long-term outperformance. But of course, not all businesses are perfect. And for us, investing in a business is just the beginning of a long journey with these companies. Because we are long-term, we can build relationship with managing teams over time. And after we build that relationship, we engage with these companies to ensure that the interest of minority shareholders like us are protected. And this, we believe, not just leads to containing risks, but also improving in returns over time. So just to give you some examples, Sankan Electric, which is a semiconductor company that I mentioned earlier. After years of engagement, they listed the US subsidiary on Nasdaq, and this led to the unlocking of value and the re-rating of the stock. Another one is Kansai Paint. It's a paint maker that has operations around the world, especially in emerging markets. In the past, they were aggressive with M&A and less so on customer engagement. But we engaged the company to really focus more on restructuring of the business and focus on profitability, as well as improving diversity in the board. And all these things have led to a re-rating of the stock. The trust has outperformed the market consistently over the long term, 3 and 5 years, and also since the change in mandate in 2013. The 1-year number is we're behind the market. Performance has been hurt by the broader market sell-off, especially for some of these growth and quality stocks. But we believe that this is actually an attractive opportunity to invest in these stocks that have been sold off. We won the award for investment trust for Japanese equities from Citywire last year for 2021. And we believe that this is recognition of our investment in quality stocks that are resilient over time, and their ability to continue to grow throughout the economic cycles and navigate difficult times like we are seeing now by the broader market sell-off, especially for some of these growth or quality stocks. But we believe that it's an actually attractive opportunity to invest in these well-run businesses. Right now, there are uncertainties with respect to what's happening around the world, geopolitical risks, cost inflation, and so on. And while the direct impact, so some of these things could be limited for Japanese corporates, there could be indirect effect in terms of cost inflation, but we are investing in high quality businesses that have pricing power. They can pass on cost inflation, higher cost, and we believe that these will come with a time lag. And at the same time, as you can see on this left-hand side chart, this shows Japan's real exports by goods. You can see that last year export hit historical highs for many of these products, from cars to IT products. And more recently, it's been affected by supply chain issues and logistic issues around the world. But we believe that underlying demand is firm, and these companies are poised to recover or benefit from recovery once some of these issues are solved. And at the same time, in terms of domestic economy, you can see on the right-hand side chart, there are signs of peaking of the 6th wave of COVID we're seeing in Japan, partly helped by third booster shots that are being administered around the country. And you can see that the consumer confidence index is recovering gradually. It's obviously a stop-start, but it has hit the bottom, and the peaking of COVID cases could help with Japan to return to some normalcy after a tough couple of years. With the global and broader market sell-off, variations are quite attractive in our view. This provides us an opportunity to invest in these high-quality businesses that can outperform over the long term. On the historical and also in comparison to markets elsewhere, topics for PE is looking quite attractive. given the relatively firm outlook for some of the high quality businesses in the market and held in the trust. And it's not just about strong business models that can help to offset the uncertainties we are seeing right now, but also structural improvement in governance that we're seeing, partly due to some of the engagement work that is ongoing, but there are multiple drivers for these stocks to re-rate in our view. Right now, the trust is well positioned for some of the pickup in global economy or the domestic economy. It could be a stop-start, but as you can see, the top 10 holdings that make up about 40%, just under 40% of the fund, they are a mix of global businesses, global leading businesses, such as Toyota, Sony, Shinetsu Chemical, Keyence, but also some of the beneficiaries of return to normalcy or reopening in the domestic economy, such as Tokyo Fudosan, that has sizable commercial facilities in central Tokyo. Aberdeen Japan Investment Trust AJIT is an all-cap mandate, so this enables us to invest in some of these large global companies as well as these smaller companies that are waiting to be discovered by the market, and we have the team to do that. In addition to the strong fundamentals of the stocks we hold, the trust provides a dividend yield of just over 2%, which is higher than the peer group average. And also there's an active share buyback policy supported by the board. The trust is currently trading at a discount of around 10%, and with the broader market sell-off, we believe that this provides an attractive opportunity to invest in Japan through the trust AJIT. So just to summarize, we believe that Japan is an interesting market to invest in terms of alpha generation because of the inefficiencies in the market and the quality businesses we find. And we have the resource locally and globally to discover these alpha generation opportunities. Now is an interesting time because many of these quality businesses have been sold off along with the broader market sell-off, but at the same time, the business models or the fundamentals remain unchanged. So this concludes my presentation. Thank you.
Hisashi, thanks very much for your time. Much appreciated. It's interesting to have a run through of Aberdeen Japan Investment Trust and how the trust works and how the team manages the portfolio. So thanks once again for your time on that. So I'd just like to thank our people dialing in to listen to this recording, and I'd like to remind them that other recordings from our Around the World webinar series are available on the QuotedData.com website for them to view, and also on our YouTube channel. And watch out for all those either already on there or coming up in the near future. Thank you all once again.